Today, I would like to introduce Hong Kong tax system. Hong Kong tax system is simple and tax rate is low compared with most of Asian countries. There are three direct taxes in Hong Kong. First is profit tax, that is corporate income tax. Second is salary tax to individuals. Third is the property tax chargeable on rental income from real estate. Hong Kong adopts territorial source base of taxation. That means only business profit, employment income, and property rental income from arising in or derived from Hong Kong is taxable. Moreover, Hong Kong has no capital gains tax, no VAT and GST. Currently, Hong Kong has concluded more than 30 bilateral comprehensive tax treaties. Now, let's talk about the profits tax. The normal tax rate is 16.5% for limited companies and 15% for unincorporated business, such as partnership. From 1st April 2018, two-tier tax rate regime was introduced. Under this regime, eligible company can reduce half of the tax rate for the first 2 million Hong Kong dollars assessable profit. That means 8.25% for limited companies and 7.5% for unincorporated business. Moreover, capital gains, dividend to shareholder, and profits sourced outside Hong Kong are tax exempted. On the other hand, in order to protect tax revenue, provisional tax may be charged based on current year assessable profit. Tax filing. Hong Kong companies can freely choose their accounting year-end date. For companies having year-end date between April to November, the tax filing deadline is 2nd of May of the following year. December year-end date companies have tax filing deadline on 15 August of the following year. Companies having accounting year-end date between January and March, the tax filing deadline is 15 November of the same year. The first profits tax return is issued around 18 months after the due date of incorporation, and the filing due date is 3 months from the issue date of the return. In order to complete the tax filing, the company should submit tax computation report, audited financial statements, and profits tax return. Offshore income claim. Unlike most countries, Hong Kong adopts a territorial sources principle of taxation. Only business profits, employment income, and property rental income arising in or derived from Hong Kong are subject to Hong Kong profits tax. It applies to both residents and non-residents of Hong Kong. Although the concept of locality of the source of income seems simple, in reality, its application often can be complex. No universal rule can apply to every scenario. Whether business is operated in Hong Kong and whether profits are derived from Hong Kong are determined by facts and determined on the nature of profit as well as of the transactions which give rise to such profits. Not all taxpayers' operations are relevant to determine the sources of profits. The key is focusing on the location of profit-generating activities as distinct from the incidental activities such as accounting and auditing. All Hong Kong companies have legal obligations to do tax reporting to Hong Kong Inland Revenue Department, RRD, even the companies are eligible for applying offshore income claim. Please note that offshore income claim is not automatically given by RRD. Moreover, offshore income claim is a year-by-year basis exercise. In other words, successful offshore claim in 1 year does not automatically guarantee offshore income claim in other years because the company may change its mode of operation. Taxpayer can submit a claim for offshore income together with its audited accounts and profits tax return to IRD. After receiving the application of offshore income claim, IRD will assess the cases and usually will raise queries regarding to the details of taxpayers' mode of operation and request taxpayers' transaction documents of some representative transactions in order to support the offshore income claim.